Hello, hello, hello. Happy GDP Thursday. How's everyone doing? Ro in first. Good morning, Ro. Hey, Patrick. I did not see that McDonald's says reports on price hikes inaccurate. I didn't see the price hike report on McDonald's. Good morning, Sterling. What else do we want to talk about right now? What else? Let me just really they're going to register in China. They're so far behind in full self driving compared to the other Chinese. That's going to be interesting. It's just another pump. Just another pump. GDP numbers came out. Thank you for posting them. Initial jobless claims came out. Thank you, Sterling. We'll go through them in a second. Good morning, John. Good morning, McRangers. Good morning, Jacob. Uh, Holy newsfeed, Batman Earth Sterling. Sterling is one with the newsfeed. Hello, Charles. Good morning, Legion Reaver. We'll wait for some other people to trickle in here. Can we get some more likes this morning, or dislikes, or anything? Anything you want to do. All right. Let's see. We got the GDP growth rate. This is backwards looking, of course. This is the second estimate of Q1, coming in at 1.3, in line with consensus, down from 1.6 prior. So with all, I just retweeted a Jim Iorio retweet. Revised GDP data for the first quarter shows government expenditures grew faster than first estimate, while consumer spending was revised down. And with all this deficit spending, this is separate from that. With all this deficit spending, this is the best we can do. Think about if we weren't like spending like drunken sailors. I mean, we'd already be a negative GDP. So this just, and the consumer's running it. The consumer's really starting to tap out. Can this keep going longer? Sure, it can. But at some point, it's not going to end well. At least those are my thoughts. But that's separate from trading because you got to keep trading and with the trend. Now remember, long term valuations just aren't there. Short term, we're getting some technical damage starting. So what else do we have? We had the GDP price index at 3.1. We had the core PCE coming at 3.6, celebrated because it was down from 3.7 estimate. Still, and this is backwards looking, the more important PCE numbers are out tomorrow because those are the PC. This is the whole quarter for the first quarter. We're looking at April's PCE numbers tomorrow. So don't mix those. Don't mix up why there's two PCE numbers because this one's for the full quarter and backwards looking all the way to the first quarter. The second one is more. The one tomorrow is more recent. Continuing jobless claims coming in at 1791 versus consensus of 18, so still hovering there. Initial jobless claims slightly higher and creeping up slowly. What else? We got pending home sales coming out in about 50 minutes, 53 minutes. And we got the EIA numbers today because Monday was a holiday, so we did not have them yesterday. And we had crude back into consolidation, could not hold the key support, especially on the closing basis, back into consolidation. So I'm going to see today if it can get that bounce from the EIA numbers. We got the 15, 30-year mortgage rates and some bill auctions coming out. Yeah, today's the 30th. I have my order in for T-bills, 4-week T-bills. Pretty much, I'm rotating only into short-term T-bills right now. From might be a little early, but I'd rather be early and miss out on some upside gains than be late and be rushing at the end. So, just where I'm sitting, I think this is the fourth consecutive week I'm rotating stuff into bills at this point. So, got a nice ladder starting again. We got Williams speaking at 12:05 and Logan speaking at 5, and those are Eastern time. And then tomorrow we got the core PCE and PCE numbers. So that's what's going on. We got. Let me just refresh the if it does refresh. Oh, come on! Don't start messing with me. There we go. By the way, Salesforce. This was the first, I believe, revenue miss since 2006, down close to 17%. Getting hammered right there, getting punished for the miss. We also Dollar General out today. We had Best Buy out today. We got Tesla up a little bit on the China pump. Other than that, mega caps somewhat mixed to down. Groups, let's just do another refresh here. We got technology leading the way down, pretty much led by Salesforce, CRM. And we have financial and consumer defensive. So if on a little bounce so far today, it's got financial and consumer defensive and really leading the way. Consumer cyclical. It's interesting to see consumer defensive and cyclical both up. But we're gonna have to keep an eye if a technology can bounce back today and get a little slight bounce, a choppy slight bounce going into the PCE numbers tomorrow. Fed cut for September dropped. The cut percentage raised, the pause percentage dropped slightly, but still favoring that over that GDP info, but that's another story. Fear and greed in neutral. So that's where we sit right now. As I mentioned, we have Dollar General, we have Best Buy. Best Buy missed on Best Buy's up, but it missed on revenue. Beat on EPS, missed on revenue. I did not see the guidance yet for that. Dollar General was a beat, which is not necessarily a good thing for the consumer when Dollar General's beaten. By the way, Costco, which we have waning momentum on a weekly basis with so we have a big divergence. So we're going to see if Costco's still holding up. Costco will be interesting after the close today. All right. Let's see where we sit. Let's see who else is in here. Here we got Sterling. Best Buy beat on EPS, miss on revenue. Oh, I don't even have to. I just should look at the news feed, the Sterling news feed. Corporate profits dropping. Yeah, consumer spending appears to be still pulling back, but consumers are still spending. They are pulling back. And credit card balances are going up. So, let's see. Yeah, the settlements, there's been some interesting stuff going on with some settlements. My opinion, we've been in a recession for almost a year now. See, we're offsetting. I don't know if we can say we've been in a recession for almost a year. We're in another bifurcated economy. If we took out all this friggin' government spending and the prop-ups, we would have definitely been in a recession. We have a very bifurcated economy where a bunch of people are really, they have been struggling and they're struggling more, but you have, this is where the average is very different from the median at this point. So that's what I'm looking at. I think we've dropped. We could have dropped, but again, you got to go. It's all a game anyways, because what they're going to do at some point is say, oh, we've been in recession for the last 6 months, according to the feds that labeled a recession. What's the point? If everything's rear view looking, what's the friggin' point? All right, separate from that, looking at the S&P, really keeping an eye on this 4-hour rotation zone. Now, the major PCE numbers are coming out tomorrow. We're coming out of some oversold conditions, My key area is this 52.75 area. We start getting above 52.75. The next major target is 52.85. And then if it goes on a run for some reason, it's 52.95. Those are my targets. That's just how they work out with the fives. But I'll be paying very close attention to the 4-hour rotation zone. Okay? I came down yesterday and put on the harmonics from the high on Thursday to the low on Thursday, the pausing low. And that gave me the overall target of this 52.50 area, which we came down, 52.50. So now with this pause, if we do break, which is there we go, that's the correct low. If we do break down for some reason, and I'm not unless we get some kind of really strange move today, the next key target areas for me are right around 52.41 to 52.36 and then 52.20 area. Those are the next targets I'm utilizing, especially going into tomorrow. And see here, in this slowly running down channel now, in the bigger perspective, we have daily cycles at the bottom, but not yet turning up. We're not oversold yet. And we got weekly cycles at the top in the bigger weekly picture. The bigger weekly picture you see right here, pure price action. Guys, coming down to the rotation zone, coming back up, making a new high with a lower high in the RSI, and trying to rotate over. It'll be very critical to see where we close tomorrow. Because we start rotating over, it can be an early warning sign that we're going to at least possibly head choppy to lower for the next few weeks. So I'll be paying a very close attention to that tomorrow. What does Mrs. Arnold trade? No, Mrs. Arnold does not trade. Mrs. Arnold leaves the investing and trading to me. She's too busy. I mean, she's a senior leader in technology, and she runs all of the financials for the technology division, and she's also in charge of cybersecurity, change management, vendor sourcing. She runs a bunch of stuff. She's essentially second in charge to the CIO. So that, and you know, her company is the second largest, well, it's not her company, the company she works for is the second largest revenue generating firm in the medical, not for profit medical space after the AMA. So she, you know, so she does not have time to do that. Does not have any time to do that. I mean, she was up at 4 a.m. today with me, and then she was working till 8 p.m. last night. She works insane hours. NASDAQ coming up. We had a little spike higher right here. Little spike higher. The key area I'm watching, if we do continue to run up in the NASDAQ, we flip this now, is right around this 18,800. 18,800 I'm looking at. And then on a rotation back down, I'm going to be watching this 4-hour bar low at 18,715. So we came off the 87.5. Remember, we closed on Wednesday below the 62.5. We came back down, pausing briefly at the 75 yesterday, but then 87.5, and now we're getting the bounce. Bigger picture. We're holding this very key area, this 18,700. So really pay attention on a closing basis to 18,700, by the way. That's a really important closing basis. If you're looking for the shorter term stuff on any bounce, and this is pretty much for today only. Your next key level is at 18.8 to 18.820, and then 18.859.50. That's about it for that. Now, if we start breaking down below that 18,700, pay attention to Thursday's low, 18,621, and then watch that on that closing basis for the double still in play. The Dow, look at the Dow. Whew. That is not a pretty. We got the 1 day pause I talked about the other day. We sliced through it on Tuesday, followed through on Wednesday. Still watching for the Dow to reconnect with this 37.8, but would not be surprised to at least see a pause or some choppier price action going into today. 18,275 to 18,3 is my first level of resistance. Key support area miners is 37,987. More significant, 37,807. Russell. Oh, also with the Dow, keep an eye on this too. We got the rollover with the rotation zone on the daily. So now on the daily, it's bearish mode. Weekly is if we close the week below the rotation zone, the weekly has gone to neutral. This, and I've talked about this before, I don't trade crossovers or anything else, but it keeps me with the bigger picture because look, when's the last time this was at neutral? Well, the weekly was technically bearish right before we went into the buy mode at the end of October. So the last time it's been neutral or bearish was at the end of October. We came down here but did not close below the rotation zone. Look at this. This would have to do a substantial rally. Now, that could happen tomorrow with the PCE numbers. But if we close below the weekly rotation zone, it's gone to neutral on the weekly, and we'd be in bearish on the daily. So just think about that. That could be a major shift starting. That's why I'm getting a little more cautious. I'd rather give up some potential gains than fight for the exit. Russell, there's just isn't much. The key resistance today is 2069, 2070. Supports 2024. VIX, bump up. Then after the GDP numbers starting to collapse, VIX is also getting to cycle tops on the daily, but turning up on the weekly. So could we see a pullback, especially tomorrow's PCE is going to be very, very interesting. That's all I'm really watching for to help determine the next key short-term direction. Hey, good morning, Richard. Gorgeous trend downline. Yep, there is. T-bill and chill. You know, there's nothing wrong with short-term bills. Nothing wrong. Locking in a risk-free over 5%. Nothing wrong at certain points to roll into that. You know? Let's see. What else do we have? We'll take a look at the CRM chart. Oh, the DAX triggering a double little bounce here, but still not technically moving down the stop yet. But the key on any bounce is about 18,575 to 18,650. The notes, little bounce today on the GDP numbers. Key resistance now is at 108.15. Substantial close below the 62.5 and the 75. So still going to be watching for that rollover play to that 107.15.5. Yields pulling back a little, but this is a beautiful. I love to see this rising rotation zone. First cross rising rotation zone at the prior resistance becoming potential support. So on any pullback, still watching for the next rotation move up after tapping the 75. So, did it qualify for a potential double top? Yeah. Do I still think there's higher play in here? Yes. Now, the only thing that shifts me majorly is if this double top were to trigger. Other than that, I'm watching for a continue higher for longer in the 10-year yields. Not much to talk about with the 10-2s. Dollar index barely triggering this channeling double yesterday and pulling back, but I'm still now going to be watching for the dollar wrecking ball to come back into play. The only thing that changes it right now is if we get a close back below 104.06, which is roughly the 200. Also, that would invalidate the double. Crude. So I was watching, as I said yesterday, for this support level, and we closed below it, and now we're pulling back. We got the EIA numbers tomorrow. I will get more concerned if crude, from the bullish standpoint, if crude closes back below 77.83. Then I'll be watching for a retest of the low area. And then that would be a fake out to the downside, a fake out to the upside, and back into the middle again. Stuck in the middle again. That sounds like a song. Gold starting to perk up here a bit. If we, especially tomorrow, with gold, and this is short term, if we really start running above roughly about 2370 for the short term, I'll be watching for a potential gap fill to 2393 area. Remember, we still haven't triggered this double, and longer term, unless this double is triggered, it is still in bullish mode. The daily's gone to neutral, but the weekly is still clearly in bullish mode. Silver, still a potential double top. Talked about this, might be a great way to, from a trailing level, to lock something in. Copper, remember we triggered the double, little bounce. What do we watch for? If you remember in the bounce, we take the candle bodies and for a double top in the low. So we watch for resistance, look at the shelf with the candle bodies and that low. Came down, triggered it, bounced back up there. Now rotating back down, hitting the first target. Hitting the first target. So that lowers, from a short perspective, any stop. Definitely lowers the stop, and now any close above 497 would invalidate it. Personally, would not have a stop that far, because you start taking out these little highs in here, and especially closing above them, then that would have been a pullback. We already hit the first target. What else do we have here? 10 years, taking a little pause on the yenster, the 10-year Japanese yen. We're getting a little pullback, but still going to be watching for the yen to keep rotating back up. Euro, barely triggering the double top and a little bounce in there. Now this one went beyond that. But with these GDP numbers and the dollar weakening, which the EU could cut in June. So we'll have to see about that. But the invalidation point for that double is close above 108.61. First target is still 107.59, roughly 107.60. Spiders, again, there's no great pattern here. I'd just be looking, if you're looking at the short term here, if you get any bounce. I mean, we're still inside to this 524.46. This is 524.72, so that's the key resistance. And then I look at 525.75 to the downside, 523.68, then 522.63. Remember, there's still a gap here, especially for tomorrow morning if the PCEs come in higher. That's the 523. The Qs holding the rotation zone. I'm still looking at the harmonics from this wide range candle. So 455.61 going to the open, 456.22, 457.31 to the upside, 454.03, 452.94 to the downside. Nvidia coming down with that little mini double. I said, do not look to short. Look to those key levels and bouncing back up. Nvidia's starting to look tired, but we're still getting every dip buyer coming in. That's why I would not be advisable for a short. The only thing in the short term is if we get below this 1100 mark. CRM, then we'll look at, we have CRM. It's, if you look at the weekly, it's a weak double. I mean, a weak head and shoulders. But this was not something I would have tried to front run at all. Okay? This is not something I would have tried to front run at all because that was a weak upward sloping neckline, head and shoulders, and that is a massive move straight back to the 50% from the lows in December to the run up in February. There's the 50%, and there's the 200. So that would have been a target that I would have utilized for any shorts. If I was looking for major short stuff, that would have been a target. The minor short stuff, remember, we opened up here at 272. The minor level I would have utilized for structuring trades would have been this 247 to 249 in there. So roughly, if I had to go off strikes, it would have been the 250 strike, 245s or 250s, or 240s and 250. And then the next key would have been this 220 area, 225. Beyond that, the key line in the sand is this 198.50. 198.50. Yeah, we're getting some little after the major yield, but it's not going to be a big pullback signal just yet. Exactly. What was the name of that band? Stuck in the Middle with You. Something Wheel. I forget the name of the band. Steelers Wheel. There it is. Steelers Wheel. Thank you, Jacob. Let's look at some stuff. Advanced Auto Parts. Not much to talk about there, but I mean, longer term, it's shifting into potentially bearish mode. Not much to really talk about. The next major, we've bounced off the 87.5. So the next major target area, if that breaks down, is returned to about 28. Intel, still watching for this to reconnect with the 28 level. On any bounces, I'm watching for rollovers. U.S. home prices to grow 5%. So are they ever projected to like really fall? So over the next 3 years, we're supposed to go up. What's that? Over 10%. You see salaries going up 10%. You see wages going up 10%. I sure don't. All right, let's take a look at the S&P and the open. Little break above short-term resistance with the tick. I am really watching for that choppy bounce to the tick. A moderately strong opening. But nothing's really changed. I'm watching for that 4-hour rotation zone. So we're getting back up above that key low right here. So that's going to be watching to see if we can hold above that, this 52.73.50. If we can break and hold above that and turn that into support, otherwise that's still going to remain, that area is still going to remain resistance for me. If we turn it into support, going to be watching about 52.85. All right, boss, 1 hour gold. Boy, I really don't trade gold short term. But inverse head and shoulders. Let's see. I'm not seeing an inverse because it can't be this. Because you come off this low. So overall, if you were looking, this would be the only pattern I'd be looking at, not an inverse head and shoulders. I'd be looking at, see, this came down to your 75% harmonic, which puts it into a very lopsided sloppy double. So the key area on at least a 4-hour follow-through closing basis above 2365.5. Then I'd start looking at 2381, 2381, 2396. But this would not be an inverse head and shoulders because this part of the move was already lower than it. And an inverse head and shoulders is reversing a move, and you already had a down move end before that. I just did. It's not an inverse. I know the chat's lagging. But it's not an inverse head and shoulders. It's a lopsided sloppy double. Yeah, you trade on Oanda. We'll just use the same thing. If it's an inverse head and shoulders on Oanda, but if you have a low before your inverse head and shoulders, a lower low than the head, it's not an inverse head and shoulders. All right, with that, thank you everyone for tuning in. I shall talk to everyone later. I'm looking into Rumble more, doing some more streaming, which does not mean YouTube's going away. It would probably be, the majors would be YouTube, Rumble, and X. So I'm going to be looking into that more in the next little bit, just giving you a heads up. If you want to go and preemptively follow me on Rumble, it's Michael G. Arnold. Michael G. Arnold on Rumble, because I might put up some test things on there. All right, with that, I will talk to everyone later. Bye for now.